Did you know that selling an investment for a profit could impact your Medicare costs? Today, we're going to take a deep dive into how capital gains can affect your Medicare costs. Be sure to stick around to the end because I'm going to show you a few strategies that you can use to reduce the impact on your Medicare costs. Before we dive in, I've made a free Medicare cheat sheet that you can download using the link below in the description. Be sure to check that out. So, what are capital gains? Capital gains are profits from selling an asset such as a stock, real estate, a business, or some other form of an asset. And there are two types of long-term gains. There's short-term and there's long-term capital gains. There's a huge difference between the two, the way they are taxed. So short-term is if you've held an asset for less than a year, and long-term is if you held the asset for more than a year. It's very important to know that short-term capital gains are taxed at the ordinary tax rate, and long-term capital gains are taxed at a lower tax rate. Now, it depends on where you live and what your tax rate is as far as how much taxes you're going to pay on those gains. But remember that short-term is taxed at ordinary income and long-term capital gains are taxed at a lower tax rate than your ordinary income is. So how do capital gains affect Medicare costs? Well, they affect Medicare costs in the form of what's called IRMAA, or Income-Related Monthly Adjustment Amount. The IRMAA affects your Medicare Part B and Medicare Part D premiums and makes them go up based on which IRMAA bracket you fall into. Medicare looks back 2 years at your modified adjusted gross income and uses that to determine if you're going to have to pay an IRMAA or not. So let's take a look at the IRMAA brackets for 2025. Keep in mind, they're looking back 2 years, so they're looking at your modified adjusted gross income in 2023. So depending if you're single or married and how you're filing, single or jointly, they will look at different income levels. So as you can see in the chart here, less than $106,000, no income if you're single, and less than $212,000 jointly, no IRMAA, no adjustment there. And then as you go down the list, depending on what your income is, for example, if you're between $106,000 and $133,000 single, you're paying $259 for your Part B. And then if you're filing joint, it goes between $212,000 to $266,000, $259 for the Part B, but also keep in mind the Part D, you'll be paying $13.70 per month, plus your Part D plan premium. If your Part D plan has a premium, you'll pay the IRMAA in addition to that, and that's whether you have a Part D plan or a Medicare Advantage prescription drug plan. A lot of folks have a zero premium Medicare Advantage plan with drug coverage. If you have IRMAA, they'll charge you the Part D IRMAA on your Advantage plan because it has the Part D embedded in the plan. That's why it's called Medicare Advantage prescription drug plans. So the IRMAA maxes out at $500K for a single, $750K for a joint, married filing jointly, and the Part B will be $628.90 per month per person, and the Part D is $85.80 per month plus the Part D premium. So that's how Medicare determines if you're going to have an IRMAA. They look at your income going back 2 years. So if you sold an asset and you have capital gains, that will cause you to have a higher modified adjusted gross income and could easily put you into one of the IRMAA brackets. So it's very important to plan ahead so you can anticipate if you're going to have an IRMAA, because depending on what your income is going to be, you could pay a lot for your Medicare Part B and Part D coverage. So let's talk about some strategies you can use to minimize the effect on your Medicare costs. So number one would be to work with a qualified CPA or tax planner that can plan ahead, because remember, Medicare looks back 2 years. So if you have some assets you're thinking about selling, it's important to make that plan and plan around it and work with a professional who can help minimize the effect on your taxes to possibly prevent an IRMAA or at least keep you in one of the lower IRMAA brackets. Other than working with a professional, some ideas are using tax loss harvesting, which would be if you have any assets that have a loss, You could sell that asset in the same year that you sell your asset that has a capital gain. You'd be capturing the loss on one asset and applying that loss to the gain on the asset that has a gain on it would help bring down your capital gains for the year and potentially minimize the cost on your Medicare, preventing you from going into an IRMAA. Also, in regards to Social Security, because Social Security does count towards your modified adjusted gross income, whether it's taxed or not, you could perhaps delay your Social Security if you don't need to take it right away. So that could prevent an IRMAA. So you're planning on selling an asset and you're deciding whether or not to take Social Security. Taking Social Security and selling an asset in the same year could put you into an IRMAA bracket where maybe you could delay your Social Security a few more years, and that could perhaps keep you out of an IRMAA bracket. So that's one thing to consider, is to delay Social Security and not take it right away to keep your modified adjusted gross income down for a few years. Also, if you're going to sell an asset, maybe it's a stock and you could spread it out over a few years instead of selling it all at once, and at least keep you in one of the lower IRMAA brackets and not put you in the maximum IRMAA bracket. So to recap, the big takeaways are to understand the difference between long-term capital gains and short-term capital gains. Understand the IRMAA brackets in that Medicare looks back 2 years at your modified adjusted gross income. Some strategies you can employ are working with a tax professional such as a CPA or tax planner, using tax loss harvesting, delaying Social Security, or perhaps spreading out the sale of an asset over multiple years to break it up so you don't take that big income jump in 1 year. If you have Medicare questions or need personalized Medicare help, feel free to give us a call at the number below or use the link in the description to book an appointment with us. Don't forget to click like and subscribe to stay updated on all things Medicare. Thanks for watching the video, and we'll see you on the next one. Thank you.